Good evening, everyone. Welcome back to our monthly webinar. Mic test, mic test. Hope you guys can hear me. Welcome back, Kananga community. How's everyone doing? I started the session slightly earlier, and if you can hear me, do type a 1 here. Anyone? Hello, hello. Okay, I'll assume. Thank you, Sarah. Others are quite shy, right? Is this your first time? Let me introduce myself. I'm Adrian Ng, your market analyst that will be moderating the session tonight. And tonight we will be having our construction and power specialist, Tay. I like to refer him as Tay. His full name is Mr. Tay Ken Young. Sounds very informal, right? Yeah. Tonight we have Tay with us. Has been covering the sector for quite a bit. He's definitely a specialist in power and construction as the main team. The last few sessions we had with him on the sector, we had a very good run on the Gamuda, Suncon, and many other names. Tonight, we are at the last month of the year, and before I start, we all also have a special guest, which is our Warrants Queen of Malaysia, and some say Asia soon, Isabel, which is gonna share us on how to pull the trigger at the last defense. Probably, if I got it right. But I'll leave it to her to share to you in a while. Disclaimer, I hope you can see my screen on the disclaimer here, where Isabel, myself, and also Tay are licensed by SC, and we are licensed to give advice. Hi, Tay. Can't hear me. Okay, no problem. Just restart. While Tay is restarting, let me do something here. We have a bit of time. We have a bit of time. And normally what we will be doing is, ta-da! These are the awards that we have been gunning and won in 2025. And we are not just a local champ Jago Kampung. We are also quite good. So good that we got recognized internationally. Let me admit Tay back. And as usual, before we start our session, this is what I'll normally do. I'll talk about the market color of Dow Jones, Hang Seng, STI, and also FPMKLCI, the broader sense of the direction. Something that I normally do on a Monday morning, but always a recap on Thursday night when I had the chance to see you guys again. If you all would like to have session that's more consistent at night, we will, give it some thought. But let's come back to Dow Jones. I want you to look at this 2 point here and this 2 point here, the lower one and the higher one. Now we are at a very awkward zone where Dow Jones is fighting to see which side is gonna win, the strength on the bull or the bear. But of course, as it is now, even I have shared on Monday morning that the rebound is looking to retest the previous peak that is a record for Dow in history at 48431 level here. And this time is very critical. If it does not break past this level with ease, this line here, which is 48431, the retracement might come down. There's this paradox. Everyone is expecting the rate cut will be boosting the market, but sometimes I've always highlighted that when everything sounds so good and confident, especially in a rate cut environment, we want to be a bit more careful. And I'm highlighting that again. So tonight is a night to watch out for. While waiting for the Dow to open, we'll have our session on the construction outlook, where we can find out how do we see the sector and what opportunities are there in our Malaysia's billion ringgit data center wave. Hang Seng now is also at a pivotal point where it's trying to decide to break past and go higher beyond 20,000 level, 27,000 level. And yesterday and the day before, there's some weakness, but he's still quite well supported at a 25744 level. This level is anchoring it. Once once the momentum break past the moving average line, there will be a potential breakout. But as it is, it's still 50-50. But if I were to take a view, I'm optimistic in that context. Bullish upwards. I need to take a view. Straits Time Index is looking to retest its all-time high. We'll always be wondering what is Straits Time Index. It's our neighbor Singapore, where our PMX just is in Singapore now for its retreat and signed something on drug controls with Lawrence, PM Lawrence. Yeah. This is where you can see that there could be a potential double top and you want to be very wary about. But nonetheless, the way I see Singapore is it's going to be robust next year. If there's any retracement, it's an opportunity. Why? Because the MAS have already allocated 5 billion thing to actually prop the market, especially small cap. FMKLCI, we are at a range bound here, a slightly broader range, is flirting around the zone of 1617. The broad market consensus and our market range of target from the fundamental perspective is about this level, 164 something level, if I'm not mistaken. My head of research is in the chat. He can always correct me, right? Hello. Yeah. And we are pending for a breakout. While the attempt on the banks of breaking past, it is pulled down by Tenaga these few days, where Tenaga saw a blip after a good run. It has seen sell down. I did a quick check on the flow for Tenaga. The foreign net selling is pretty much heavy. Hence, there is still some room to go before it settles down. Campaigns. These are the campaigns I'm having. It's really ending soon for Wake Up to Go. Designed especially for our dormant clients. If you have friends that are dormant, do wake them up. I love the song Wake Me Up when September ends, by the way. This gateway to go, a very good opportunity to seize if you're trading on US and Hong Kong stocks, which, if I'm not mistaken, once you surpass a minimum brokerage of 1,000, you will be in the running for it. DF Stretch will be a facility that we are giving a promo rate for the fee, which is at 0.2% and 6.8. What is DF? A lot of people ask me. It is a T+7 facility, which allows you to hold the position slightly longer than T2. Of course, this dude here with the slightly brighter smile is me. And this is what I do every morning, every Monday morning. If Monday morning is a holiday, the session will be pushed back to Tuesday, next working day. The link is here. I wouldn't make you type everything, so probably later I shall share it in the chat. KDI Safe is one of our products that is really, really good to max out our pocket money. We want to make it work hard. This is a daily rest. You'll see the reflection come in every day. I love this session. Quote, the intelligent investor is a realist who sells to optimists and buys from pessimists. Benjamin Graham. I think I take a bit of a time, so I shall invite Tay. I shall not steal his thunder, but yeah. Hello, Tay. Shall I pass the floor to you now?
Yeah, hi, Adrian. Thanks. Okay, let me load up my slide.
Thank you.
Can see my slide?
Yep,
Wait, let me put it in full.
sharp and clear.
Is it a full screen?
Yes.
Yes, okay. All right. Okay, probably I'll start now. Hi, thanks. Good evening, everyone. Thanks for joining us this evening. I'm Tay Ken Yong, the and the utility analyst at Canada Research. Today, I'm going to share something that I've been taught in the past 2 years, actually. Um, Last 2 years, actually, I only concentrate on constructions. But I think this time, I'm going to talk about the outlooks together with the utility as well. Because I think of course, the focus is data center. Data center is not something that is very new. In 2021, 2022, there's already, there are some DC developer already come to Malaysia. But I think that really there's still a standard for Malaysians or for Malaysia to stand out in the world is because of this news when NVIDIA say that they're going to partner with YTL Power to set up an AI-powered data center in YTL Green Data Center Park in Johor. So this was exactly 2 years ago. Since then, I think it have changed the totally different investment landscape in Malaysia. That you can see that the equity markets have been very strong, or the focus in the construction and related. And that's actually you see that constructions the construction sector, the index actually have been outperformed the KLCI. The index itself is actually up 70% for the past 2 years as compared to KLCI, which is up by about 12%. That mainly led by Suncoin. Share price actually tripled in the past 2 years. Gamuda actually has a double since then. And the other key construction stocks, IGM, sorry, let me remove this to a slide. IGM, which is out about 25% for the past 2 years. And even then, I think it's still very good as compared to CI, which is only up 11.5% for the past 2 years. And if looking at another sector that I'm going to talk about this evening, the utility sector is actually up 35% for the past 2 years. That's basically driven by YTR Power, which is up by about 43%. But if you see that when they make the announcement in the end of December, in the end of 2023, share price actually more than doubled in the middle. I think it's for about 6 months, and then you see a choppy session until today because I think the earnings are not up to par. There's a lot of new flows coming through, so the share price have been quite volatile. And I think for the past 2 quarters, the result have been quite disappointing. I guess we are hold on to the thesis is that YTL Power is going to benefit from data center in the longer run. That they're going to have a recurring income, but because that the earnings still haven't kicking in yet, well, their YT their power, their IPP in Singapore is actually hit by some headwinds, especially that it's very competitive. The price are on the downtrends, and the cost is expected to go up. Hence, there are some headwinds on that. But I think in the longer terms, I think by 2028, they are looking at about 1 billion EBITDA for their existing data center operations. By then, you will see a better earnings from now. Okay. So following that NVIDIA news, we also see others tech giants actually they make a commitment to invest in Malaysia, a total of 16.5 billion US dollar over here. The first one start with actually is Microsoft. I think in sometime May last year they have announced that they're going to invest about 2.2 billion US in Malaysia, followed by Google about the same time as well, 2 billions. And then by August AWS actually say that they are going to invest about 6.2 billion in here as well. And the last one, or the latest one, will be Oracle. In October last year, they say that they're going to invest about 6.5 billion US. That's a very they have drawn a lot of FDI into to the country. So since then, actually, there are totals of this is what we can see from the Bursa announcement. That there are several land deals that the DC developer that acquire lands from those landowner, especially you can see from Crescendo, the plantations company that have a lot of huge lands in Johor. They actually have disposed of, as what we gather from the Bursa announcement, a total of 8 pieces of land. Quite a number of it actually went to Microsoft. So Microsoft actually they have involved in 5 land deal, and beside that, Pearl Computing, which is an associate company of Google, they also announced 2 deals and 2 land deals as well. Both are in plan ready or sort of like off, which is in Negeri Sembilan. For Microsoft one, most of them actually is in Johor. Then why all these DC developer they come to invest in Malaysia? It's very simple. For simple reason, we have a cheap or quite competitive electricity tariff. If you compare to the financial hub in Southeast Asia, with Singapore, we are way below. I mean, talking about the prices, it's so cheap. We are so close to them, so that you compare to. For Malaysia, you compare to Thailand, Indonesia, they are not so close to Singapore. Especially our Johor is just across the causeway. It's so near, and I think with our geographic locations, we are like typhoon proof. We have a flat land, so hence. We are ideal land for them to set up the data center in Malaysia. And beside that, I think we have a very strong cable connectivity. We are talking about dark fiber or your normal fiber. We have that infrastructures as well. And then with the government support, either with the state governments that have a fast approval for the land deal and some incentive by the government. So that's actually have attracted a lot of this DC developer to set up their hub. To set up their DC in Malaysia itself. So that's that is the background for why this international tech giant that they set up their data center in Malaysia. So what types of opportunity are there for the construction sector? I think for simple DC, I think if talking about the DC buildings itself, it's just no different from outside from the industrial buildings. You just a 4 wall, it's just like a factory. But I think what is different is that the requirements are high. Of course, we will have our normal core and shell, the buildings itself, as well as the M&A. But what difference is that the requirement, like I say, is high. There are 2 types of I mean, we can very generalize to divide into 2 types of DC: the traditional one or the AI focused DC. There are certain specific specs that the DC developers that they want the builders to comply with, especially like the ceiling height, the floor. How you're going to take it when the server are very heavy actually. So this is a structural requirement for the M&E parts. It will be super high requirement compared to your normal industrial buildings. They will need for a traditional DC, it needs a redundancy of either 1 + 1. So meaning to say is that your power generations might be a standby mode. Let's say you got 10 megawatts of capacity that you need to have a genset of 10 megawatts to support. That is 1 time or +2 times. This is for the traditional one. If you are talking about if you're talking about the AI, there will be a 3 times higher. So if your data center need 10 megawatt, you need about 30 megawatt of gensets to stand by. So these are the requirements, is different than your normal traditional industrial building. So of course the cabling, this and that, and the cost will be higher as well. For a traditional one, the cost will be about 30 million per megawatt. The AI DC will be about 2 to 3 times higher. I'm talking about the normal core and shell plus the M&E without the server. So this is the basically the difference between the AI, non-AI, as well as the industrial, the normal industrial buildings. So what is the impact for construction player? It is positive. Basically, all these projects are fast track. Fast track, it can be as low as 12 months to 24 months. And of course, there are some longer, probably 3 years with a bigger project. So the shorter the time frame, the DC player, the DC developer are willing to pay a higher price. So hence, there are better margin for this type of data center job. And at the same time, the IBS, the industrial building system that our local builders that have, like your Gamuda, your Suncon, your IGMs, actually they have all these products, and this is very well suited for the DC project, basically because it's very customized. When it customized, it's all standardized. So and it's fixed to the requirements. It's easier for you to do, and then it will be fast. So it's meet the requirements. So I think our local players have this type of products. It's easier for them to do the DC project. At the same time, with the strong pipelines that I'm going to share later, we are projecting that 700 megawatt DC project each year actually. So if you multiply by it, assuming all are non-AI, that would be like 20 billion job that's up for the builder to get. But of course, on the downside, I think like just now, as what I share, you only see core and shell, mechanical. The M&E is actually is a simple one, not those are very specialized spec. So the specialized spec for the M&E works basically is the DC developer. They'll appoint their their own contractors to do it, and because of the requirement is very high, the margin of error is very low. So if you cannot meet it, then you'll be penalized. So that is the downside on it. So far what we see is that the local builders is benefiting for this, your Gamuda, your Suncon, your IGN. Even the engineering projects managers at IHS also, and then those infra utility that doing the substations, the transmission projects like MN Holdings, CBH, Berhad, they are benefiting as well. You can see that the share price have been up by 3-4-fold actually for the past 2 years. And then of course, needless to say, you need cable to link up. Southern cable also share price have run 3-4 times actually for the past 2 years. And these are the projects that have been announced through Bursa Malaysia that we have gathered for the past 2 years in total of 18 contracts for worth of 13 billion actually. That is already announced. So what in the pipe and what in the pipelines that what you can see, this slides that I'm sharing now is actually it just came out from Tenaga third quarter result briefing this Monday actually. The latest numbers shows that they have completed about 29 projects, 3.8 gigawatt of projects. There are 12 projects that is under the pipeline, 2.2 gigawatt. There are another 8 projects that is already signed the ESA. So that one is impending. So you can see there's actually there are still a strong pipeline from now. according to the Naga pipeline that they have been shared for the past, I think 1 year, they are looking at up to 7 gigawatt actually in total, up to 2033. So now it's 2025. You are still got 5 years to go actually, that before the current ESA that they have signed that will be complete by 2030. So basically, in the near term, at least I think we can see for the next 12 to 18 months, these are the pipelines that I gathered that from the builder like from Gamuda, from Suncon, or even IGM. So per computing, Google, they are still got 2 more that will be in plan ready. So far, they've announced 3 that you can see from this list. In May last year, the projects that gone to Gamuda. The second one is in August this year to Gamuda as well. The latest one is just slightly more than a month ago. IGM won it. So there are 2 more. One is in this is in Samdabi land. And the last one will be in the Eco Park, but this land is belong to Per Computing that they acquire from the Eco World. And beside that, after that, they will have another piece of land that acquired from Gamuda last year, 389 acres, close to 400 acres of land that could cater for about 8 to 10 DC that in Spring Hill PD. I think the tender will be out middle of next year, and it will go over about 2 years. So I think that is big and sizable enough for the builder to bid for it and to share. And other than that, I think you see we have this Yellowwood as well. I mean, the first 2 phases actually was won by Suncon. So now they are going to third phases. K2, this is the Robocop company. The phase 1 actually also won by Suncon. They are in start negotiating for the second phase, and there is an equal base. There's AWC, then Microsoft as well. So in the near term, there are pipeline of projects that are up for grabs actually. So if you're looking at the 3 bigger construction company, Gamuda, Suncon, IJM. Gamuda since January last year, they have secured 3 data center project worth a total of 4.3 billion. And if looking at their latest outstanding order books based on this is their 4th quarter FY25 earnings that ended in July. They have a current outstanding order books of close to 39 billion. 9% of their order books actually is come from data center, 3.5 billion. Suncon itself, they have secured 6 data center projects worth about 4.14 billion. And based on the latest quarterly, which is just announced about 3 weeks ago, at September, their order books actually is 5.4 billion. 37% of their projects are from data center, which is equivalent to about 2 billion. For IJM, since January again last year, they have won 4 projects, total close to 3 billion. But however, they have no breakdown in their their order books, their current order books, which is have about 8.4 billion. So you can see that's actually based on the CIDB number I had checked this morning. Actually year to date up to November, the total contracts that have been awarded actually is 182 billion. The private project actually make up 76%. As you can see that for the past 2 years, okay, just backtrack a bit. Last year's actually, middle of last year, we have set a target that, the contract rollout will be total of 180 billion over year 24, 25, 26. So far, last year, it hits above. This year, 11 months is already on par with our full assumptions. And next year, we are still looking at 180 millions. We think that this year is unlikely to hit 2016 number. Whether it can achieve 2024 or not, I think it's a tall order, but it's possible as well, because at most of the time, December number will be stronger. You will see some, a spark up in the numbers itself. But this chart is going to share with you that in the past, you can see that the private side is actually is 100 millions or below, and last year is a big jump. This year as well, they're actually driven by the data center project. Hence, you will see that there's stronger number. So from now on, actually, even the next year, you will see that the data center is going to be one of the contributing factor that going to drive all these contracts award. Okay, for the last year, this year, and next year, and this is basically for the construction. Now we come to utility. For utility itself, I'm going to share the same slide as just now I shared. The demand for how to say, the electricity demand growth actually is driven by the DC. You can see from this slide that the data center actual loads utilization. Basically, it's talking about the data center that's go online. Meaning it says that the data center is already in place. They already cable in and they are running. You can see that from the first quarter of 2024, it was about 150 megawatt to now 710 megawatt. So on this Monday briefing, in fact, the CEO of Tenaga, Dato' Megat, he actually said that for the load to go up by about 100 megawatt in 3 months per quarter. He actually said he read in Tenaga for I think close to 40 years. The last time he saw that the demand for the load capacity to go up 100 megawatt by a quarter, actually it happens in more than 30 years ago, in the early 90s, when Malaysia at the boom, just the pre-97, 98 financial crisis. That is in Malaysia, whereby the GDP have dropped. That's our good old day back then. So that is where it seems actually 100 megawatt load up for every quarter. So he had not seen it for the past 35 years. So now you see again, every quarter, the load factor actually up by 100 megawatt at least. And he said that actually this September is up, I'm sorry, the third quarter of this year is only up to September. He actually said that in August, sorry, not in August, in October, the number actually went up to 800 already. As you can see, let me go back to the slide before. You see, when this, if you based on this completion schedule, quite a number of this project is going to be completed by next year. The one that announced 2 years ago, I mean last year, because these are all our fast tracks project. So all these projects is going to be completed in this next year, the next 12 months. So meaning to say is that you're going to expect that the load factor is going to be increased. The step up will be quite substantial for the next 12 months actually. And what you're seeing is just the first phase. Is you still haven't seen that those that under the one that just completed, that what you see from here, the 11 projects that completed in this year, meaning to say is that at the Tenaga end, not at the construction phase. And how about those that are under constructions and those that already signed an ESA? So the message that's going to share is that the demand growth for Tenaga is going to be very strong from now. Okay. Then because of strong demand, we need power plant. ST already say that the country needs 6 to 8 gigawatt of power supply by 2030, and ST actually have put up the request for proposal, invite all the or the operator to bid for a power plant, or okay, they basically for a power capacity. Basically, they divide into two categories. The Cat 1 basically is the extensions of the PPA for existing IPP. And the second category will be a new a greenfield gas power plant. Okay, so for the Cat 1, so far they have made announcement that they already got the approval for the extension. It's all from Tenaga. Three power plant, one in Grugok, Penang, 310 megawatt. There's in Senior Klang Valley for Putrajaya, about 240 megawatt. In Negeri Sembilan, there's about 700 megawatt that they got their PPA extended. And then for the second, of course, the existing players like your Markov, your Ezra, even the existing the Naga IPP, they were waiting for the extensions also for this part. For the Cat 2, Category 2, the announcement is expected by end of this year. So that is the timeline, because the COD will be by 2028. So you're looking at timeline, actually it's a fast track as well. If the announcement is going to be out by this year, it take probably a year to do all the things before they can to do all the groundwork before they can kickstart. So by end of next year, they only can start start building. So you got 27, 28, so it's about 3 years. So it's quite fast also. So they have to meet all this timeline to get the supply out by the 2023. Okay, so with this new greenfield projects, I think if you based on 6 to 8 gigawatt, that could cater about 5, 6 power plant. Existingly, we got your Tenaga, I mean the IPP is all Tenaga, Ezra, Markov, and as well as YTR Power, they already indicates that they are interested. So there are 4 party, assuming everyone get, I mean, there are 5 to 6 power plant. So I think easily for them to share, actually, these 4 players to share. Markov, they already announced to Busa that they have 2 sets of gas turbine, 1,004 megawatt. YTR Power, they also says that they have secured, but of course, verbally that they have said so. So actually, that shows us actually the local IPP, they already get ready. Once the announcements out, if they win the contracts, then they can start to doing the groundwork. So when you have more power plants up by 2030, of course you need gas supplies also. So the gas demand is going to be increased. Petronas already announced that they are getting the 3rd RGT. The locations will be in Lumut. The first RGT actually is in Melaka, Sungai Udang. The second one actually is in Pengerang, to cater for the Pengerang petrol complex. So the third one will be in Lumut, because Lumut's actually got quite a numbers of power plants there. Your Tenaga power plant is there. Several power plant, Tenaga power plant is there. The Malakov got at least 2 power plant is there as well. Your GB3, the Segari is there. So I think that is a good location to put it there. And I also understand that there are 2 other parties that are going to submit their request for proposal as well to build up RGT, the regasification terminal as well. One of them actually is Gas Malaysia. They have said that they are very interested. And according to the sources, says that as long as your proposal come with your off-taker, then ST will give you the contract. So I think this is what the sources says. I think it has to be confirmed by ST, then we only know that whether they can get it or not. So basically, the data center not only drive our constructions company, they're going to drive our utility companies as well, and they will be going to support, not only a very short term like constructions companies that you only go 12 months to 3 years, depends on your construction period. For utility, you are talking about 15, 20 years type of duration. So it's a long term. Then go to Tenaga. Tenaga is very simple. Their earnings are regulated. the earnings is supported by the IBR. The earnings will be 7.3% return based on the IAV value. And what's going to drive the IAV value, the regulated asset base, basically is the capex, the allowed capex that approved by the ST. So if you're looking at the RP4, we started January this year, will end over 3 years to December 2027. The approved capex, base capex is 26.5 billions. That's actually is much higher, close about 6 billions higher than the approved in the RP3 back in 2023. Yeah, 2022. The number is higher by 6 billion. On top of that, there are 16 billions contingency capex. So that is going to boost up your Tenaga earning base. You're just looking at the following page. This is the Tenaga regulated asset base. Okay, up to 2024, these are all the actual number that I've taken from the annual report or their quarterly result. Okay, you can see that over this period, this is RP3 2022 to 2024. RP2 is from 2018 to 2020, but 2020 because of COVID, they got extended from 1 year to 2021. So RP2 actually is four years. Three base year plus one extension, and then 2022 start with the RP3. Now we got 2025. So you can see from the number, I just take 2022. Back in 2022, the regulated asset beginning is about 62 billions. By the end of the period is 61. There's a capex that put in actual 6.7 billion for their regulated asset. Depreciation of 7.7 billions. Their regulated earnings actually is 4.5 billion. So if you take this number, simple calculation, 4.5% over by 61%, that is 7.3%. Then 23 is 7.7%. The last year is 7.8%. If you average it out, it's 7.3 because the return on assets for RP3 is 7.3%. Actually, it's the same as the current one, 7.3%. So that's why you can get a figure. And back to the number, if you're looking at the core earnings based on our workout, 2022, the non-regulated earnings is 240 millions. Okay, because the fuel margin is 1.1 billion positive. But come 2023, the core earnings drop, and then there is a negative 1.2 billions, mainly due to the negative fuel costs. And last year is a small negative for non-regulated, so hence the fuel margins are lower. Okay, let me go back to a few slides before. You look at here. Oh, sorry, I don't have the number in this slide. The latest one, actually, they are making profit for the non-regulated earnings for the Genco side. First 9 months, they make about 250 millions actually. So why there is a difference compared to previously? Because that your non-regulated earning for the Genco, basically, you sort of like subsidizing, sort of, in theory, because that you see your capacity payment when Tenaga under the formula, your IPP, as long as you standby at a standby mode, the take up more than 85% for Gen 3 generator, Tenaga have to pay you 95%, and then it will step up to 105% if you are at full generations. So prior to the DC period, because okay, you see, Malaysia, our reserve margin are high. Before that, it was close to 40%. Now it dropped to 30%. So when your generation loads are lower, whether you like it or not, Tenaga still have to pay as long as your IPP maintains certain utilization. So either you are 85, you are 90, you are 100%, you are still need to pay 95, close to 100%. But now, because of the high demand, your power plants are overwork your utilization will go up. So hence your top line is going to increase, whereas your sunk cost is always there. It's flat or slightly marginally increase. So hence that is going to improve your non-regulated earnings. So in this data center wave, not only drive their RAB value, which is going to drive their regulated earnings. At the same time, it's going to boost up their non-regulated earnings, which is the Genco side. So that is a two angle for Tenaga. Okay, so I just explained this one. Now it come to 2025. Based on 26.5, the base capex billions, I average it out every year will be 8.5, 8.9 billions a year. So if based on 7.3 return each year, their base regulated earning will be 5.3 billion. It will be higher than so many years before. It will be a record high actually. So every year is going to hit a record high. If their capex spending go according to, every year is the same. So this is for the regular earning, not talk about their non-regulated earnings. So this is is going to drive the Tenaga earnings going forward. And come YTR Power. YTR Power is the one that really involved in data center development because they own the data center. So basically now in their 500 megawatt in this data center park in Johor, currently the one that developed actually is 188 megawatt over 3 phases. So the phase 1 48 megawatt, about 34 megawatt actually is already have a lease payment with C Limited, which is your TikTok. 2 phases is 2 blocks is already go online. There are 2 more. Next block, 8 megawatt will be February next year, and the last block will be February in 2027. And then the remaining 16 megawatt is already ready for service in August. So it's actually now is by live already. So for phase 2, another 100 megawatt. 20 megawatt actually is catered for the AI. Basically, that is an AI DC at the YTL data center level. This is a colo, but at YTL AI DC, there is a partnership between YTL and NVIDIA. So that is the one that is going to lease from the YTL DC. So this is 2 megawatt. It's already go on live in October. And there are 2 more phases, 40 blocks. This is a non-AI. It is just a colo that they actually lease it to a US hyperscaler. It's already ready for service in September. And the last block will be ready by March next year. And the phase 3, 40 megawatt, 20 megawatt is ready for service in September. Next block, 10 megawatt will be July next year. And the final block will be in July 2027. And currently, it's actually they are in the planning for another 8 to 100 megawatt is in planning. And beside that, for this data center story, like just I mentioned, they actually tender for a greenfield power plant under the CAT 2 for the ISP, which with the timeline result is going to be out by by end of this month actually. So all in all, our topic Gamuda is our top pick for the constructions. Tenaga is our topic for utility. So why we pick Gamuda over Suncon? Suncon basically is too concentrated, but of course that if we're talking about pure data center play, Suncon will be the one, because whatever come in, it really is going to push out their bottom line, and hence their target price. And for Gamuda, because it's too diversified, um, uh, if we based on the order books currently, I think they make up about 7%. It will be, if max probably go up to the 10%. But why we like it? They are the biggest now. They have make a very strong presence in OC, especially in the developed market. Margin may not be so lucrative compared to Malaysia, but they give them earning certainty in Australia, in Singapore, in Taiwan. Their order book is at a record high now, close to 40 billion. But of course, they are growing their presence in RE projects. In Malaysia, water, they already have it in they already involved in projects in Selangor, on the project level, I mean at the construction level, and project level as well. And then they have it in Sabah as well. Currently, it's still in constructions, and the upcoming concession in Perak. And beside that, in Australia, actually they are involved in several RE projects, like the solar farm in it's actually in still in negotiation state at this Tasmania, working together with the landowner, plus wind turbines as well. So they have a very mixtures of good portfolio that they can diversify. I think the key takeaways actually from this, my picks actually, you can see from this slide that their projections for revenue. Their revenue is expected to actually double up by July 2028 from currently 16 billions. It's going to drive strongly by the construction side. The construction side, of course, not only in Malaysia, outside as well. And the property side is actually also, as there's a big jump. They have been aggressively extending their projects, launching their projects in Vietnam, Malaysia as well, actually. So basically, this is why I'll call on this pick. Our target price 613, and Tenaga, our pick 1680 as just how I mentioned. It is the only integrated power producer in Malaysia. They involve from generations to your T&D. So this company is going to benefit from the influx of data center investment into the country. It's going to be a long time to go. It's not a short time. The earnings is basically supported by the IAB, the IRB frameworks, with a return of 7.3%, as just I explained. And when you have more data center, you need to upgrade your system, upgrade your grids, upgrade your all these capex. Yeah, and it is the top 3 index stocks, something that we cannot ignore, and very defensive, as just now as I mentioned. But of course, there's a risk that to invest in 2 sectors. First, if you're talking about construction, if too over dependence on DC contract, just like your Suncon, there's a reason why I not pick Suncon also. But I think I'm not overly concerned about Suncon if the musical chair for data center is stopped, because they actually internally within the Sunway group, every year they can give them like more than $1 billion, close to 2 billion type of a project, so they can sustain the earnings. So worst case, they were just back to 2 years ago, that type of earnings. So, but I think now you still can, based on the current trend, you can at least have 3-4 years to go maybe. Second, margin compression if you cannot meet. So you remember just now I say the error of margin is very, very low. So you cannot, if you cannot meet, then the penalized will be very high. That is going to eat into your margins. Then of course the execution, because that you have that much of a capacity, you cannot get more than that job for you to execute. So I think that's something that the local builder that they have to manage their projects also, because that they also cannot be too concentrate on the data center. For utility itself, the grid capacity, so they need to upgrade the grids. That is for sure. The generation foreshore. Remember just now I say by 2030 the country need extra 6 to 8 megawatt of gigawatt of power supply. If the new power plant cannot build on time to cater to match this demand, then it would be a very big problem for the data center developer. So that's a risk as well. A tariff as well, that if every 3 years, when after the RP4, which is going to end in 2027, there's a revise again, that is going to affect the operator as well. And there's also a high concentration on loads, because the data center is going to take out a big loads on it. Anything happen to the data center operator, and then I think there's a big work. There's a big capacity that waiting other operators to take out. So one thing, and then lastly, very important also, water, because the data center is not only you need a power supply, you need a water to cool down the system as well. So I think this is very important. Okay, so this is what I can share for tonight, for this evening. Adrian, go back. I'll pass it
Thank you,
back to you.
Tay.
Welcome.
Probably we'll see if there's any question. For those that are really, really curious to know more, do type your questions in the chat box. We are starting the Q&A now. And there's one from Sheikh Nasir. Besides YTL Power, which listed company will have substantial revenue from renting their DCs? DC owner other than YTL Power.
Okay, if I'm not wrong, I think there are two or three property developer and Massing. I mean, those that are really involved in operating the DC property. Ecover maybe
Sign?
and some W prop that they actually own the asset.
Yep. I would figure Sign would be the bigger player as compared right after YTL Power, right? But they are more like just a leasing agreement rather than operating.
But it's the same as YTL Power. They also leasing. They do a leasing.
All right. There's a question from Han. That's how I'm supposed to pronounce your name, right? Han too is Han, right? Question: why Tenaga has been falling the entire week? I love this question. I get that a lot this week, and I think
a lot of people ask. I think it's quite difficult to answer. I think the latest news today, I think I was heard that there's a news saying that Khazanah is going to place up shares, place out their stake in Tenaga, but I think there's no confirmations on that yet. Share price of Tenaga have been quite weak. I think you can go back to the history, is that Tenaga is a stock that they have been victims of to me because I've been covering the stock long enough. In the early day before the implementations of the ICPT back in 2014, the share price have been up and down because of the fuel costs. So I remember back in 2014, prior to that, actually the share price was at 4-5 ringgit. Once the ICPT announced and implemented in January of 2014, the share price shot up actually. Eventually it reached about 15, 16, 17 ringgits actually, and then it's a bit choppy and it came off. There are many reasons. There's one point because of ESG, because 60% of their capacity actually is a coal fire plant. So it's those so-called dirty fuel. So they were penalized because of that. But I think today no one questioned that anymore because DC is so hot. Without Tenaga, without the coal-fired power plants, you have no power. So I think no one questioned that anymore. Maybe yes, but I think there's enough factors that overcome this. Then after that, the tax issue. So actually, I was quite surprised that by Monday, when last Friday, when they announced the result, they put it into their statement saying that they have paid actually all 10 billions in total for the dispute that they have together with with IRB over almost 20 years. They pay in advance, meaning not to say that they agree with the amounts, but why they pay is basically just not to be penalized if like tax. If the IRB audit you, if you don't pay, they will penalize you, right? So if you delay. So I think so they paid first as an advance and agreed by IRB. If there's any amounts eventually settled at certain level, they can get a rebate for their future to offset by the future incomes. So to me, it's really a positive news because before that, everyone worried that if they were to they have to pay for the 10 billions, then that is going to affect their dividend payout. But they settled everything. You can see the latest result. They paid 5.5 billions in the third quarter. There's a cash outflow. There's a cash outflow. So meaning to say that actually they have no problem to pay their dividend. In fact, just now the CFO called me because to ask, actually, I think he called out all the sales analysts to check out why the share price is so weak, this and that. So to find out what happened. He actually told me that he thinks that my dividend assumption is too low. And I said I only put 50%. He said no, it should be 60%. Okay, if you based on their dividend payout policy is 30 to 60% of their earnings. And Tenaga have been paying more than 60% for the past 2 years. For simple reason, I think government, I'm not sure it's their order by the government. I think you see most of the GLC, they pay good high dividends. So Tenaga have been paying good. And they're not going in the past they pay good, they're going to pay at least 60%. So the CFO told me, he said, I guarantee you this year I'm going to pay 60 or more. Next year will be the same as well. Percentage-wise will be still the same. So I thought would be a positive news, but shall I go, falling. So don't know how to explain seriously.
All right. Maybe if you do not mind, Tay, can I add a bit on potential reason why it's also falling? Because due to the request of this query, I did a bit of digging. In the month of running up to July, where it is a peak, there's a shift of fund flow where the foreign fund is pumping it from a low of negative 600 million net outflow to about a positive zone, while at July, just for instance, is where the local entities are selling. In this case here, right, when I did a quick check on the flow, I noticed it's inverse this time around where the foreign selling is a lot heavier. Let's say for yesterday it's about 90 over million. That could explain it where the local support of accumulation is not there yet. But probably, would you see that it's a very good opportunity if we are looking at the Naga for a long term as a starting point to accumulate?
Well, as just now I mentioned, definitely Tenaga will be a key beneficiary for this DC wave. As just now I showed, that their regulated earning base is going to be increased substantially because of that. You need more capex to build out your grids, your transmission line, your basic. At the same time, the non-regulated side as well. So they are at the two fronts. This is the stock. Another is for stocks that's actually most of the GLC fund owns it. Okay. In the past, back to 2014, why there's a big jump actually the foreign fund came in when there's a certainty, there's an earning guarantee, sort of not say guarantee, but it's a certainty because there's a pass-through mechanism. So when it comes to ESG, I mean, you check back the timeline when ESG issue hit foreign fund actually exited. The price the price came off. Back to your July, when you see there's a turn, that is a time when they lost a case to IRB that they have to they cannot use reinvestment allowance codes to apply for their tax allowances. They have to use investment allowances, use investment allowance code to apply. So that happens actually in July. So that's the reason why the share price tanked. But before that, actually, the share price was quite big also because of I think some other reason. But suddenly the share price move up again because of the DC. Because during the result, the Naga show what is the actual load utilization for data center, and that actually reflected in the earnings. So I think fund are acquiring the shares, but because of the court case, the share price got tanked. It went down all the way until today. And you
Okay.
ask me, you need a foreign fund to come in to buy the stock.
Yeah, I guess so. The balance of the is where the fund flow of the power is. Let's move on from Tenaga. There's a question from Ray. What's your take on SolarWest cheating and PowerVal?
Where's the question?
Is in the Q&A beside the chat tab.
Yeah, I know, but I don't see the question.
It's at you need to click on the Q&A tab at the close Q&A.
Okay, now can you repeat the question again?
View on SolarWest cheating and PowerVal.
A view that related to DC. Okay, you see, SolarWest, of course, is a solar players. Actually, not only SolarWest, even Gamuda, they also tied up with some prop, I think, that they participate in the CRIS, that they are producing green energy. And you know that I think most of the time people always want ESG. Oil on ESG. So they will sign up with all these operators. SolarWare is also one of them. So that they will just buy from the grid to get that. Yeah.
Okay. There's one question from AK in the Q&A tab. Are you recommending YTL Power as a long-term buy also?
For now, you ask me longer term buy, yes. Short term earning will be choppy for now.
Okay.
I see YTL Power. I mean, everyone can disagree with my point, but what I can see for the past 2 years, you go back to my just now the slide again. Let me pull the slide again. Sorry, over it. You look at the YTL Power.
Yep.
I feel it trade at 3 to 4 ringgit. Buy at 3, sell at 4.
The range bound, very nice way of trading
Yeah, it's
it.
very
Wow.
nice. So now actually it close to 3. I think you can just buy. I will I'm the fundamentalist, but sometimes I'm looking at it pattern, it tells something why it's this way. Okay, let me click first. The YTL Power earnings have been disappointing for the last 2 quarters. Power Seraya earnings have been on a downtrend, and it's not going to stop here. 40% of their so-called favorable or the cheap gas supply is going to expire by end of this year, December. By end of this month, basically 40% of the cheap cost is going to be end by this year, 40% now. So that's for Power Seraya. So that will going to reflect in the next quarter, and then you only see it in the first quarter of next year. So the result will only out in May. So in the next 6 months, you will not know what exactly power supply earning will be. Okay. And at the same time, of course, longer term, why I say longer term is positive because of the data center. But the data center is not going to go in full stream now. So you probably will see 2027, you will start to see the earnings that the 188 megawatt earning will be there. And we don't, okay, data center is new. It's new. So you don't really see the earnings also. You can plug whatever figure from those US operator in US. But I think bear in mind that we are operating at a different business environment. We are not charging the same rate. We are not operating at the same cost. So we can't take that as as an example. So I think for YTL case, you have to see by earnings second half calendar year next 2026, then you can see what exactly the number will be. So I think they are still, for me, if I want to play safe, I will just trade just like I say, buy at 3, sell at 4.
It's a buy on weakness. I mean, I did a quick technical charting for the benefit of thesis. If you guys can see, there's a 3 circle around on the oversold zone as a reference point to actually look at that range. And the support zone where we can actually reference is about 312 and 286. But we can't gauge where it will go, but that's where we want to do a bit of location as we go, right there. I guess that's the best if
Yes.
we were to
I
approach it.
think the other question probably you ask your target price is 440, why you should sell at 4 also? So, but like I say, near term, there's uncertainty lah. But I think you give them another year, then you will have a better picture.
Yep.
I think that they got a lot of things on the plates. You're talking about, the IPP that's going to come in. But to me, YTL Power, the earning base are big. So the power plant is going to have not going to have a significant impact to their bottom line. And they are not going to own 100% for one. Second, your telco side, yes, they will just launch their so-called, they launched their first 5G advance in the country. But I think yet to be seen. They have been the first to launch the LTE many years ago. You don't see the earnings until today. So I'll put aside. I think that the one that I want to focus probably would be the fiber.
Oh, okay.
The fiber, but I think we don't see anything yet. That I think it would be a major earnings driver for them in a longer term. But for now, because we don't see anything, so yeah, you can put a number in, the forecast number, whatever you can in. But I think it's very simple. Today, if you fail to deliver your earnings, let's say quarter on quarterly down, then why you should? I mean, the investor may put a question mark, should I continue to hold? Basically, it's because of that. So you ask me, I think I will probably see a better earning certainty probably in 12 months' time. When you
Okay.
see Power Raya, how bad is the earning, how good is the data earning by then, whether they can match it out or not, then you can position as some. Now I will, maybe
Wait
it's
for
a trend.
opportunity.
Yeah. At this level, low 3, I think is very attractive based on
Yep.
YTL Power. Yeah.
As you suggested, I'm gonna set an alert at these price points now, man. Okay, let's see if there's any more question from Wilson. The lorry overweight enforcement has any significant impact to M Cement or other construction companies?
I think questions should be yes. It should be yes, because I think the lorry used to carry like 50, 60 ton. So now I think only 30 ton. So meaning to say that last time one load, now you need 2 times. Your cost is going to be higher. But I think it all depends on when they sign a contract, are they able to pass on the cost? Is one thing. Eventually, this is going to keep the consumer, the end consumer. For the builder, I think it all depends on their contracts.
Yep.
It all depends on the contract. But you will expect that your end products prices is going to go up now.
Yep. We will be ending up paying the price. One
Yes.
last question from Wilson. Back to Tanaka, is a very hot topic tonight. And thank you guys. I love that energy. A quarterly report from Tenaga, new auto-adjusted tariff is improving revenue or reducing?
Okay, I think let me explain. Okay, people always say when they look at a headline, when the tariff up by let's say 5%, you expect the earnings to go up by 5% or vice versa. The answer will be no. It's a definitely no, because that the all these are passed through. You see, RP now is RP4. Start January this year until end of 2027. It was set a tariff. Now it's 50 cent. I mean 50 plus minus 49 something. We just say 50 cent. This tariff actually they set this tariff with a few criteria. What is your fuel cost? Let's say, okay, first would be the generation mix. Let's say 50% are from coal, 30%, 30 to, sorry, close to 60% are coal, 40% are your gas. Then sorry, 30% are gas, and then the remaining for your your hydro, your solar whatsoever. So that is the mix that they fix. At the same time, they fix the fuel cost as well. Like what is the average coal price that to determine your eventual tariff, let's say 50 cent, and then with a return of 7.3%, a growth rate of let's say 2%. So when there's an adjustment, so when it fixed at 50 cent, previously the adjustments will be every 6 months. Every 6 months you have a review. That time it's called ICPT. Now it's called AFA. The adjustment every 1 month. So now you're looking at another bill. Every month there is a new tariff. It's not tariff. Basically, you still get your tariff at 50 cent, the base tariff, but there is one line is either plus or minus, either a rebate or there's a surcharge. Meaning to say, if their fuel cost is increased from the base, let's say 500 ringgit per metric ton for coal, it go up to let's say 550. So there is an increase in coal prices. That will translate to your auto adjustment on the tariff. That will be your surcharge. On the other hand, if let's say your coal prices drop 50, it will translate to a certain tariff, which is a rebate. So your base tariff is always fixed at 50 cents, but the adjustment will adjust every month. So yes, it will going to affect your top line, revenue up and down, usually receive. That will adjust knockoff with your fuel cost because it's a fuel pass through. So it's going to have a neutral to Tenaga earning. Top line is up and down, yes, but bottom line it will reflect. It will pass through. I think when maybe I just share one more thing that you see there's a big jump in your base tariff, 39 over cents to about almost 50 cents from RP3 to RP4. A lot of people make a lot of noise, right? I think because of what? But actually, you only read the headline. But if you go into in detail, there's no impact to you and me. Because in the RP3, the base tariff are low, but you get your surcharge at one point is 10 cents. So it's actually equivalent to your base tariff to lay. So it's a rebasing.
Rebasing.
It's a rebasing. And why there is no adjustment in 2022 in RP3? What is 2022, the year? The year is a general election 15. So when you have an election, what the government is going to do? They do nothing. No change. And then after the election, you will see that you get your surcharge. So it's actually, we are paying the price already in the past 3 years. It's just that you not notice it and then you will see your bill because the base tariff is forever the same for the 3 years. What changes is only back then is every half yearly, either your surcharge or what. Back then is surcharge because the costs were put lower. I mean, the base costs were lower, but the actual cost is higher. That's why you got a surcharge. But now why you
Okay.
see a rebate? I think last month or the month before got a rebate because your coal prices dropped. Because now your base cost is close to market, it's a market price. So from then on, every month your prices up and down, it will reflect monthly. But it's good for Tenaga in the sense that it's good for the cash flow. Instead of you have to wait for 6 months to get your cash flow in when your cost you incur first. Now every month you get your cash flow already immediately. So actually, it's good for Tenaga cash flow actually. This monthly adjustment compared to 6 months.
Okay.
Yeah. So you ask me top line, yes, because you need to book it in. But when come to the
Yep.
bottom line is pass through, it will be neutral to Tenaga.
That's a very insightful explanation, Tay. That's something I didn't realize on how we look at our energy bill. And thanks, guys, for your question. And Tay, we learn a lot on this energy sector and how it works and all this RAB. We are running slightly short on time, and I'd like to invite Isabel. But before that, let's give Tay a pat on the back and a clap. Thanks, Tay, for
Okay,
sharing the insights with us.
sure.
We
Hey,
wish that the
rocking
session is
session,
longer.
Tay.
Hi, Isabel.
Hey, thank you, Tay.
Sure.
My only question
Oh,
for Tay would be after Namibia, Uzbekistan, um, all your travels around the world. You look at Tay, right? The thing about Tay is he's an unassuming dude, okay? He looks like he's so chilled and everything. But Tay, I think you're one of the most well-traveled people I know in my life.
not
I mean,
really.
some people go to Europe nonstop, but then you go to the most obscure places I've never even seen.
Well, I think life is short. If you make from the okay, of course I'm not really what, but yeah, you when you can travel, why not?
Hey, you're killing it.
Okay,
All
Share
right,
some
thank you so
photos on your
much,
next
Tay.
travel.
Yeah, I can't wait to see it. This guy, man, Tay Kian Young. What a dude. All right, I've got 10 minutes on the clock. I will try to wrap things up. This session, I will take Tay's recommendations, for example, Gamuda and Tenaga. And if you're interested in the structured warrants to gain leverage and enter a position in the market, I will show you exactly how you can do that with a discount. Because even though Tay likes going to Namibia, I'm from Penang and I like things when they are cheaper than they should be. I like value. I don't necessarily like stuff that is cheap, but I like it when there's value. So, disclaimer, like Adrian mentioned earlier, the key thing to remember about these slides is that we are licensed individuals. So, everything we say, we are bound to it. Awards. The reason that we have won so many of these lovely awards is because we want to hold ourselves to an international standard, including the Euromoney SRP Finance Asia from Singapore, Hong Kong. But mainly the crux of the conversation I'm going to have with you over the next 9 minutes is how to buy structured warrants and how to get them at a discount and almost like a break-even price. So today, typically for structured warrants, my baby, my favorite product, because I've focused on it for 9 years, there are 5 key steps that you must know before you actually purchase anything in general. And this doesn't just go for structured warrants. This goes into margin products, discretionary financing, SBL, CBBCs, DRs, whatever you may consider purchasing to give you leverage onto the stock. So I know in Malaysia, we're a very kindergarten level society. And I say that in terms of investing because mainly people over here buy stocks. But in a lot of foreign countries, for example, the largest warrants market in the world is actually Hong Kong. And the reason that happens is because a lot of the stock prices, they are very expensive. So they force the investors to buy a leveraged product, which is cheaper. For example, a stock in the States are hundreds US dollars and above. Then people are forced to consider being a bit more sophisticated and going into options, if some of you have heard. So if you understand, if any of you have heard of options, just write options in the chat. I just want to know. If you've never heard of options before, just write no option in life. Disastrous. Okay, so the big idea today that I want to cover is that there must be a few things you must understand. I have videos on these on our Kananga group, which we've won awards for already. So the big idea is number one. Number two is where you want to put the product. So let's say if you have a product, whatever it is, you must have a product comparison, the warrant versus the stock, the risks and common mistakes that people always make. You need to Google these things before you even start. Advantages, the different types and FAQs. The next part, it'll be the tools you need to know for warrants. That'll be number three. I'll be covering these two today. Important concepts for structured warrants. There are videos on these as well. KG is Kananga Group's YouTube. And finally, number five is if you want to contact the issuer. Later, Peter. This Peter Kong that works over here, he's our head of research. And I don't think Peter goes home. Today's the first day that I saw the research lights a bit darker than usual. And our head of research has more dedication than everybody else here combined. Musty strategy. Now, I've covered this as well. I'm not going to focus on this today, but the musty strategy covers one of the questions that some of you asked just now, which you asked Tay. For example, Tay's a fundamentalist. Adrian, his background was in research, and now he's jumped into a more technical side because he's a market analyst. So Adrian straddles both worlds. He is fundamentalist and technical. When individuals ask me, and I just got this question when we did an event at Sarawak 1 or 2 weeks ago, do you prioritize fundamentals or do you prioritize technicals? Now, the question is, you go into FATA, which is fundamentals. You see whether the underlying intrinsic value is larger than the current price or not. So research houses, they will tell you whether it's buy or overweight. That means the intrinsic value hasn't been reached yet by the current price. And when Tay, for example, earlier during his slides, if you notice, he said this word, not rated. Not rated, some people, if you don't actually read it, it doesn't mean that it's a bad counter. It just means it's not covered. Is that right, Adrian? Is that my correct definition of it?
Yeah, man.
Right? It doesn't mean that it is a bad counter. It just means that it's not covered. It's not within their coverage scope. So somebody like Adrian looks into fundamentals, number one, FAR, get it, FAR, fundamental analysis. And then there's technical analysis, which is the TA, which is where you have all of these people that like to look at chart patterns, candlesticks, people like me who have a background in trading for the last 14 years. Now, the issue is when it comes to choosing stocks, you need to look at both. Tay covers the first 80%, which is number one. You need to have a fundamentally strong counter. And number two, you look into technical analysis. So for those of you who are asking, oh, you know, Tanaga is coming down and all of that, it doesn't mean that you have to buy it tomorrow. You can, but Tay's analysis is a 1 year time horizon. So you can look at it in that sense that Tay's role is to highlight to you beforehand what's happening in the macro environment. It might not happen tomorrow immediately on Friday when you wake up 5th of December, but it's coming soon. He's telling you there is a train coming soon. You can't see the train, but I'm telling you there's a train and this is the schedule. Number two, choosing a structured warrants, you need to use the Mercy strategy. And number three, last defense strategy. There are videos on this, but today we're going to focus on the buy bid promos. So for those of you who are not familiar, all right, 3 minutes. Those of you not familiar, for example, if you want to choose Gamuda and Tanaga, these are Tay's top picks. So Gamuda, if I look at the Naga matrix on www.nagawarrants.com, I would see that Gamuda C3D, this warrant over here, you can see my beautiful pink color circling. This warrant already has our orange color highlights. So whenever the orange color highlights, like a traffic light, green means good to go, orange means take caution. In Malaysia, sometimes people consider orange as in just go anyway, go faster. But actually it is take caution, slow down. And red means do not buy. So easily I can see that Gamuda C3D is a big fat no. I don't want to buy this warrant. I can exit the warrant. I can exit my position if I want to, but I don't want to enter a new position. So now I've chosen Gamuda C3U. The idea is, let me zoom in a tiny bit for you. For those of you who are watching on your phones, as I know many of you are. Gamuda C3U, the price at the moment, for example, is 516. A normal individual would have to buy the warrant at 11 cents. How many ticks is this warrant? How do you count it? If the Gamuda is at 521 until 525 on the bid, this is the underlying bid. This is the underlying ask. This is the warrant bid, which is Gamuda C3U. And this is a warrant's ask price. You notice that from 521 all the way to 525, the warrant stays at the exact same price. It is 11 cents. Now, how do you take advantage of a Penangite like me and act a bit smarter, right? If you guys can answer this in the chat, I didn't prepare a prize for you today, but I will remember your name for life. Would you buy it at, if you wanted to enter a position for Gamuda, would you go into option 1 or option 2? The answer is pretty clear, but would you go into option 1 or option 2? Press 1 or 2 in the chat. Let's see if you guys are paying attention. I'm curious to see. So option 1 is, for example, a normal person. Normal person who isn't very price sensitive and, you know, maybe not so fast. Gamuda is at 515, my black box over here. You can see that a normal person would buy it at 11 cents. You buy the offer, I want to enter immediately. But a slightly more top individual would consider the buy bid promo that we promote on our Naga Warrants Telegram over here. We can send the link over, or Adrian can help me out later. So for Gamuda C3U, if I wanted to be a bit smarter and I wanted to have a bit of an edge, I would pick it up at 10.5 cents. And how do I do that? I can see that on the Bybit promos that come out every single day on our Telegram, Gamuda C3U is on the list. There is a star because it is a trading idea by our Kananga research. And I can see that Gamuda C3U is available there as well. IJM C10, TMKCC, Unisem, YTL Power, 99 Speed Mod as well. Now, option 2, if I was going to go and buy Gamuda, I would queue at 10.5. And if it's at the bottom of the matrix, which is at the bottom, let's say this is the bottom of the matrix. This is the bottom of the matrix. If I queue over there, there's a high chance that I'll be hit by the issuer and I get the warrants at 10.5 cents instead of 11 cents. And 9:31 on the dot, that's all I'm going to cover for today because I know you guys need your beauty sleep. But, oh yeah, I have one more slide. So same thing goes for Tanaga. Tanaga, option 1, if you are not price sensitive, and that's fine as well. Tanaga is at 12.42. You can see there are many ticks onto this warrant because it is very deep out of the money. Many ticks, the price stays at the same price. So a normal person would buy it at 1.5 cents. An intelligent person, and I assume that all of you are like Benjamin Graham's intelligent investors, would like to buy it at a slightly discounted price, which is 1 cent instead of 1.5. You have to queue at the bottom there, and then you would get a sexier price. So that wraps it up for my session at 9:32 on the dot. Thank you so much, Adrian.
Thank you. Thank you to our Queen of Warrants, Isabel.
Pleasure.
And
Thank you so much, Captain A. I almost didn't recognize you without your biker jacket on and your hardcore hat. For Kenanga clients, if you've joined us, Adrian has this awesome session that I join every single Monday at 8:30 to 8:50 a.m. It is only for Kenanga clients. If you haven't, just sign up for a Kenanga account, you can join it. And he gives very insightful and with a really high win rate trading ideas that he's collaborated with Kenanga Research. So I highly promote joining Adrian's sessions on Mondays.
And yeah, thanks for the promo, by the way. And this new sign I learned, this is a heart shape, by the way. All right, the night is getting late, and yeah, thanks Tay again. Most importantly, thank you guys for doing this for yourself, for tuning in, because knowledge is the base that we want to invest in ourselves. And stay tuned. As long as you're willing to learn along together, we are always there to learn together. I mean, the market always teaches us valuable insights. Yep. Good night, guys.
Thank you, Wendy. Thank you, Chu. Thank you, Yap Ken.